Hi, everyone, and welcome to the latest edition of the 1515 podcast. I'm Adam Huckle, and I'm a partner in our regulatory and dispute resolution teams here at Maples and Calder in the Cayman Islands. And today on the podcast, I am delighted to be joined by Dan Moore, who is of counsel in our regulatory team, and Lisa Page, an associate in the same team. We will be talking today about all things CRS 2.0, some interesting points coming out of recent Consensus Miami crypto conference, and a reminder of change of control requirements. As always, the contents of today's podcast do not constitute legal advice, and you should take them as a general update only. And for timely regulatory updates from our Cayman Islands, BVI, Ireland, Luxembourg, and Jersey offices, please visit and subscribe to our regulatory roundup blog on maples.com. And please don't forget to subscribe on Apple Podcasts or Spotify. So starting with you, Lisa, you have just returned to the office after a week pounding the streets and speaking to clients and onshore US counsel regarding the changes to the Common Reporting Standard in the Cayman Islands, as well as attending a Bruce Springsteen concert, so I hear. But first, can you tell us, A, what does the boss think of CRS 2.0? And secondly, what are the key points for our listeners to note?
Thanks, Adam. So as you mentioned, CRS 2.0 has involved quite a few significant updates to the Cayman Islands CRS regime. In terms of the backdrop, this generally reflects the OECD's changes made in 2023, as well as some more Cayman-specific changes. Most of the new CRS 2.0 rules came into effect on the 1st of January earlier this year, with the remaining changes scheduled to commence on the 1st of January 2027. So we have a bit of time for those ones. But in summary, these CRS changes introduced updated registration requirements for Cayman Islands financial institutions, revised due diligence requirements involving a new self-certification form that will include new data fields, some streamlined CRS reporting dates for the filing of the CRS return in the compliance form, which were previously separate filing dates into a consolidated 30th June filing date in 2027. Also imposed a new accurate, adequate, and current information standard on registration and reporting information. Also introduced a new requirement for there to be a Cayman Islands-based principal point of contact, or a PPOC, and also brought digital currencies and crypto assets into scope of the CRS regime. So that's kind of the bird's eye view of those changes, and happy to step through some of those key changes in further detail if that would be helpful. And we'll try to limit the discussion to CRS and try to avoid any sort of Bruce Springsteen chat.
Okay, well, that's a shame. But on the CRS front, is the PPOC requirement something that the Maples Group can help our listeners with, if that's something they require?
Yeah, so that's certainly something that we can assist with. So to the extent that any entities have PPOCs that are based in other jurisdictions and are not Cayman Islands based, our colleagues over at MFS can assist with that. And again, entities will want to have their ducks in a row and have that Cayman Islands based PPOC lined up by the 31st of January next year, as this is a requirement for all FIs. And it has to be a natural person that's resident in the Cayman Islands, or a legal person with a physical Cayman office. So a mailing address, unfortunately, would be insufficient to meet that requirement.
Yeah, that's a key practical point, isn't it? Okay, well, thank you very much, Lisa. And Dan, over to you. You have similarly just returned to the office. Everyone's been out following your attendance at the Consensus Miami conference, at which none other than Donald Trump Jr. spoke, I believe. So what were the main crypto-related points relevant to our jurisdiction and our main key industries here in the Cayman Islands coming out of that conference?
Sure, thanks, Adam. Super interesting conference, and just by way of background, Consensus, I would say, remains certainly one of the flagship gatherings, if not the flagship gathering for the digital assets industry. So yeah, very happy to share some reflections on what I observed and what it means for our practice and our clients. In the regulatory space generally, I think the overarching theme this year is very much that the crypto environment has, in most major jurisdictions, be that the US, the EU, Middle East, Hong Kong, Singapore, it really has shifted from this period of regulatory uncertainty to one of more kind of structured engagement where the parameters are a bit clearer. And now the conversation isn't so much about whether digital assets will be regulated, but how these competing regimes interact. And certainly from the offshore perspective, that's now opening up some jurisdictional arbitrage opportunities. And for those of us advising from the Cayman Islands and the BVI as well, I think this maturation of the global landscape is quite significant because, I mean, it's worth remembering that both Cayman Islands and the BVI have had their own VASP Act legislation in place for a number of years now. So we're not new to the regulatory conversation, and we're well placed to assist. So I think we're now in a world where our clients are building their projects within kind of more well-defined parameters, and they expect us as offshore counsel to understand the full picture. So that's certainly why it's helpful for us to be involved in these conversations, to be attending these global conferences, and to understand, what our clients' needs are and where the conversations are taking place. At the same time, I think what we're seeing is the established advantages of offshore jurisdictions. So we all know about the legal certainty, the tax neutrality, the flexible corporate structures, the creditor regimes, and so on. These are being increasingly recognized by the crypto native operators because they tend to be nimble and jurisdiction agnostic. So we're seeing founders and teams who will move to the regime that best suits their commercial objectives. And the Cayman Islands and BVI alike offer compelling propositions that's well understood by not only these early stage projects, but by the institutional counterparties, by the regulators, and so on. A second theme, aside from the regulatory space, but on a product level, was the rise of agentic AI. This is AI that kind of doesn't really assist human decision making, but actually takes decisions itself, acts autonomously. So we're talking about agentic AI executing trades, managing portfolios, deploying capital on chain, even negotiating terms between protocols. So the legal implications of that are going to be enormous globally. And there's obviously going to be ongoing conversations around agency, liability, fiduciary duties, regulatory compliance, and so on, where you've got this autonomous system rather than a natural person or a corporate entity making decisions. So we're seeing this intersection of AI and blockchain technology. It's being built in production, and we need to be thinking carefully about how our legal frameworks can accommodate, or as the case may be, fail to accommodate these developments, because it will continue, I think, to be, this is something that is going to be a mature technology in the future. And then I guess thirdly, and maybe most directly relevant to our day-to-day work, is the acceleration of institutional adoption of tokenization at scale. So at the conference, we saw representation by the major asset managers, the global custodians, the clearing systems, the tier one banks, and these are not pilot projects anymore. We're tokenizing money market funds, treasury instruments, credit products, real estate, real assets, with kind of now a level of scale I think wouldn't even have been imagined even 12 months ago. And I think the really exciting thing is that this infrastructure is now reaching a level of maturity in terms of the custody solutions, settlement compliance, interoperability, that we're now seeing institutionals being satisfied in terms of their risk appetite to get involved, and they all want to be involved. So I think this is now the kind of inflection point we were anticipating, but it came earlier than we expected. And for the benefit of the industry, I think we're seeing tokenization scaling to a level where the end investors are going to start seeing tangible benefits, because it brings greater transparency, faster settlement, reduced friction in terms of subscription redemption mechanics, and so on, and ultimately some lower costs that will be passed through to the value chain. So I think that's very exciting as well. And just to bring it back, because I could go on about this, and people often remind me of that, but that brings me back to our own jurisdictions, and the Cayman Islands in particular, which has responded with, I think, considerable foresight through the recent amendments to the Mutual Funds Act and the Private Funds Act, which I think recognizes the direction of travel. And we now have a legal framework in the Cayman Islands that expressly contemplates the issuance of tokenized fund interests. We now have a clear statutory basis to accommodate these products. And there is now a level of legal certainty around things like transfer mechanics, register of members, legal ownership, the role of the providers, that really places us in a good position to help build out these products with our clients. So we're now at a point, I would say, where Cayman Islands has always been the domicile of choice for institutional fund structures, and now it's also a natural home for tokenized vehicles. So we've reduced the friction, we've increased the legal certainty, and we already have several instructions ongoing for these tokenized products. So it's all very exciting. The direction of travel is here. We have the frameworks, institutional capital is arriving, and the Cayman Islands is ensuring it's at the forefront. So it's an exciting time to be in this space, and I look forward to helping our clients on their projects.
Well, that's really interesting, Dan, and good to hear you're all across this. And our listeners should contact Dan if they've got any sort of crypto or VASP related issues affecting the Cayman Islands and BVI. And Lisa, the final word from you on something very different, but no less important. I know that you've been very busy recently with a large uptick in often urgent change of control applications. And you scored a major success recently with your work for Desjardins Group on its acquisition of Guardian Capital Group Limited. Can you tell us more about that and what our listeners ought to be aware of about the very important change of control rules in the Cayman Islands?
Yeah, sure. Thanks, Adam. So, as you mentioned, we are seeing quite a bit of action on the change of control front and applications being filed with CIMA. I know our team has been particularly busy with that over the past few weeks on various mandates for clients. So, simply put, these types of applications involve a change of ownership or a change of control of a CIMA regulated entity. So things like insurance licensees, banking licensees, trust licensees, or securities investment business registered person, a SIB person, that's either a regulated investment manager or investment advisor. And these types of changes of control require certain approvals or notifications to CIMA. And then acquisitions involving Cayman Islands financial services entities that are regulated by CIMA. These types of things do require quite a careful analysis because there are certain rules that apply and impose a wide range of prior approval or notification requirements depending on the type of regulated entity that it is. So I would say that these requirements broadly fall into about 3 different categories. The first being a prior approval for any share transfer, regardless of the size. The second being a prior approval only where a transfer crosses a 10% threshold. And then the third being a post-change notification only. So taking each of these in turn, the first being prior written CIMA approval, that's required before any shares or interests are issued, transferred, or disposed of in banking trust licensees, company managers, and licensed mutual fund administrators. Now, in contrast, insurers, insurance agents, insurance brokers, and virtual asset service providers generally require prior CIMA approval only where the shares totaling more than 10% of the licensee's share capital or voting rights are issued or transferred. And then finally, in the case of a SIB registered person, this is typically subject to a lighter touch regime. There's no prior approval requirement, but there's still a requirement to notify CIMA within 21 days of any transfer or disposal. And then finally, CIMA does reserve its discretion to grant certain exemptions from prior approvals for certain publicly traded licensees. So that's kind of the overarching prior approval and notification landscape. In terms of the mechanics for a regulated entity, they have to file a change of control application with CIMA, and there may be separate CIMA divisional approvals that might be required depending on whether the acquisition involves multiple regulated licensees or entities. So as you can imagine, oftentimes when there is an acquisition of a group of entities, this does tend to involve a number of different types of CIMA regulated entities. And so to streamline the process, sometimes we'll prepare a consolidated application and then ask for a particular CIMA division to lead the charge there in terms of the review. Now, if clients do require any assistance with that, we do recommend that the application is filed quite well in advance because this approval process, as you can imagine, can take several weeks up to several months, just depending on the complexity of the group structure, internal workflows at CIMA. And so that's something that our team can certainly assist with preparing as needed. And then finally, as you noted as well too, so some members of our regulatory team, including myself, we had recently advised Desjardins Group on a very involved due diligence process in a change of control application that was filed with CIMA in connection with Desjardins' acquisition of Guardian Capital Group Limited. This involved Desjardins' take-private acquisition of Guardian, and it was a fairly comprehensive submission that we had made to CIMA across several regulatory categories. So again, to the extent that any of our clients do require any advice on the due diligence process or with submissions to CIMA, we're very happy to help, and we're very experienced in that respect.
Well, thank you very much, Lisa. And yes, I would say it was a big deal, that Desjardins matter. So very well done. Well, thank you to Dan and to Lisa for your very insightful contributions, and to our listeners for listening. If anyone does have any further questions, please do reach out to us, or just have a look on our Regulatory Roundup blog for more information. Thank you very much.